We got a question a week ago from one of our viewers, and the question was, is the 50% cut in Tesla's stock price over the last year and the accelerated decline of the stock recently impactful of the Twitter stuff that's going on for Elon currently? This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, would like some ideas on better investing and trading, please join us. And interestingly enough, I'm very surprised at the question that popped up, and the reason is that for our Patreon supporters and our regular viewers, this whole issue has been somewhat covered every 3 weeks for the last 5 months. But we'll go for it again just so that we make sure we catch you up on what the thought process is. So, as you know, Elon is buying Twitter. It's been kind of ugly because he's firing a lot of people and had back and forth in that process. As I shared with many of you prior to that, there was a number of sort of potential Tesla buyers that I'd met who indicated that they were starting to lose faith in Tesla in light of some of the things that Elon has been saying and doing. So the natural question that popped up is, well, how does all of this affect, the stock price of Tesla, and is this really bad news? Now, as you know, Elon is a really smart guy. He basically has an MBA from Wharton, along with all that he does when it comes to technology. So he really has a very clear idea on how to run a company or how he wants to run a company, etc. One of the data points that I thought was kind of wild was that there was a period for Tesla where Elon would land the plane and then tell one of the managers somebody's going to get fired today. And so they'd encourage, when Elon was scheduled to be in, particularly younger employees that never met him, to kind of avoid coming to work or make yourself scarce while he's there, because there have been people that have gotten fired on one conversation that didn't go well. So, definitely Elon can be volatile. So let's get on to this whole question of the stock price falling. So the biggest question mark that you want to look at here is, look at what's been going on in case of all the high-flying tech stocks. Amazon is down. Tesla is down. Microsoft, Google, all of the big tech names that have led the rally of the stock market over the last 5 to 10 years have gotten smashed. And the average amount of decline since the beginning of the year is about the same as what Tesla has experienced. So this is the biggest sort of how and why I think things are going that you have to take time to recognize. So the problem that's going on right now for Tesla and these other tech names is that there's a concept called rebalancing your portfolio. So there are a lot of people who invest their money in the markets. 60% of the cash that's invested in the market actually is done so by mutual funds. And so they're actually compelled to buy stocks in a weighting to things like the S&P. So are there individual investors that might have said, hey, I'm done with Tesla for a while? Absolutely. But the challenge is that when you're in the S&P, there's no choice. Those managers are in a mandatory buy and hold the stock position. So I wanted to sort of point this out because, the reality is that there are managers that might want to sell Tesla, but they can't maintain equal weighting on the S&P if they do. So I think that's out there. Seeing I have really bad connection, and I don't know if you can hear or see me, but I think I'm going to push through, and then we'll take this down if it doesn't work out. So basically right now, something very strange happened with Tesla. There was a situation where Elon had the option to push employees very hard to get 5 or 10,000 more cars delivered for the last quarter, as he has done in the past. And he told his staff, don't bother with the push. So I was kind of stunned when he said, don't bother with the push. And all of a sudden we find out that the miss on the numbers was kind of greater than expected. So the revenue and profit, etc., was below expectation. And I really feel like Elon is playing a U-Pod, under promise, over deliver game with the markets and investors right now. So why I say that is that, he doesn't do anything randomly. He tends to do things that he thinks through and then executes. And it really feels right now that Tesla's going to go on a monster rally based on variables that we don't know about. So right now, this is the first time in Tesla's history that they're doing scale megapack production, and the demand from large institutions, be it utilities or companies, is huge, where they have 1 or 2 year backlogs for those megapacks. And then you throw in the demand for the needs of the semi, and you have that business is starting to scale up and generate revenue that's very much bigger than expected. I also find this business interesting because it's a recurring revenue situation where those packs have to be managed, the programming maintained, etc. So there's actually an income stream that comes off that goes beyond the sale of the vehicle that we're normally used to. So in general, therefore, the issue that's going on is that Elon's not really worried, and if he was, he'd be sleeping in the factory trying to get cars out. But he's not. He's giving us these long-term discussions without any short-term support for what he's up to, and therefore a lot of people are getting nervous. We're seeing the stock price fall. There's a whole realm of investing that's important to note here, and that is that what the Fed did was, when they dropped interest rates to zero, all of those retirees who needed income were forced into the stock market. And where did they put that money? The best growing companies was a target for that cash. Well, the Fed decided to clamp down and freeze the economy. And so in this process, we ended up with this higher interest rates from the Fed, and the high-flying tech stocks a la Tesla and Google and others have fallen. So the question mark for most seniors and people that are in a mode of capital preservation or just paying their bills regularly has really shifted, going from 0% interest to 7% or even 10% on government bonds. I mean, that's a monster number. And if you have your retirement stacked up in the stock markets, you're highly likely to switch that over to funds like bond funds, particularly with the Fed or the government behind, those bonds. Very low risk, very good returns. A lot of people can pay their bills on that. So they don't need to take the risk of the stock market right now because they have a better option that's low risk. And because they're above 60, above 70, they're not thinking on the 3 to 5 year horizon for recovery. They need that cash now. They need regular payments now. So I'm kind of bringing all of this up to you because there's kind of a soup that you mix to determine, well, what's going on? Is the future bright? Should we stay in? Should we get out, etc.? I've been sharing with a lot of people, I thought that you should hedge because Tesla's down. It's possible that analysts will give Tesla the boost it needs so we can start elevating again. But I really feel like Elon is in a 6-month to a year-long mode for the blast off for the company. And that brings into play the start of the semi at scale, as well as Cybertruck being delivered on the early scale. So I really don't expect the stock price to significantly recover until we know for sure Cybertrucks are going to be rolling off, which is probably something in that May, or definitely by May, we expect them to be here, but the signs should be there in terms of a number of cars that are being tested in cold weather situations, etc., by late February, beginning of April. And once we're starting to get a feel for everything being set for those vehicles to become reality and delivered in a timely fashion, that I believe is when the stock price will significantly start to take off, because that's a large new stream of revenue that they currently don't have. So yes, it would make sense for Twitter to be affecting Tesla stock price, but if you look at a graph of all the big tech names, I think you'll find that they're all experiencing the same amount of drop-off in value as Tesla is. And I believe Tesla will recover before them, because there's new piles of revenue and profit from placement of the Megapacks with utilities, from the Cybertruck, from the Semi. All these new revenue streams are going to be hitting Tesla. The other thing that I think is going on, and is pretty obvious, is the Chinese process on zero COVID is definitely shaping the viewpoint on Tesla and its growth. I just read that yesterday there were 31,000 new COVID cases in Shanghai. And so China's plan is to keep shutting things down all the time rather than get the proper vaccination and end the situation as the rest of the world has experienced. So this is another variable that's lurking out there that's affecting things for Tesla. And I'm hopeful that, they sort of change plan so they can get this completed as the rest of the world has, because of the use of, Moderna and Pfizer and other solutions to COVID that have been delivered. Any rate, definitely look forward to your comments on this. This is Greg for Teslafaninsight. Tschüss, German, au revoir, French, Hebrew, Hoda Hafiz, Farsi, Здравствуйте, Russian, Ni hao ma, Chinese. Just a reminder, 25 leg lifts a day with or without a weight on each leg to reduce the potential for knee issues. Thanks once again for joining us. Have a great day, and bye for now.